Well, welcome back here on YouTube. Thank you so much for this weekly update and being here for the weekly update, should I say. So let's have a look what's going on. We're barely bullish with the opening range. We're just above the 200-day moving average. The upper line for the opening range is 3958 and we're sitting at 3970. So just above that right now. If we look at something like the QQQ, the NASDAQ, we can see that we could potentially be looking at an M pattern or a double top here. Time will tell, right? We'll be keeping a close eye on that and see whether we do start to see the NASDAQ roll over. And, there's been a lot of things going on this week. We know that we weren't placing any trades last week other than the gold trade that we had on because the Federal Reserve was coming out. Now, they did raise rates by 0.25% as we expected. They did the same in England. The Bank of England did the same because inflation came in hotter than expected, right? Inflation is still a factor. They haven't got it under control at all, and it's going to be with us for quite some time. And there's more layoffs coming. Right now, we know with technology, there's a lot of layoffs going on in the tech sector, but that's the first sector. There will be other industries that start laying off workers as well. And, when you look at some of the employment numbers that are coming out with the Bureau Labor of Statistics, right, they recently come out and said they had added 30 million new jobs, right? And you think about this, there's 10 million people that have 2 or 3 part-time jobs, right? 2 or 3 part-time jobs. And what they do is rather than counting them as 10 million individuals with 2 to 3 jobs, they actually count it as 30 million new jobs. Very, very misleading. So that's going on, misleading as far as the employment numbers go. We know that the CPI or the inflation number is heavily manipulated as well, and they've taken rates from virtually 0 to 5% very rapidly. And when you do that, you start to see cracks in the system, right? You're going to break the system if you raise rates that quickly. And we know that we're seeing cracks right now in the banking system. And Moody's actually cut its outlook for the entire banking system to negative, citing rapidly deteriorating operating environment, right? This is a very big problem, and they're telling us, the Federal Reserve, that they're not doing quantitative easing. But look at this, 300 billion, should I say, increase in their balance sheet, trying to stem the losses from these bank collapses, right? We know Silicon Valley's collapsed. And we've seen several banks collapse recently, Silvergate being another one. And these aren't small banks either, right? These are very significant collapses. And now we're starting to see problems in Europe as well, with Credit Suisse virtually collapsing as well. This is a huge problem, and now the government's stepping in to bail them out, and you've got UBS, one of its competitors, stepping in and paying $3.2 billion to acquire Credit Suisse. It's a huge issue, and the government had to change laws to remove any uncertainty about the deal. It was a really big problem, and Credit Suisse has had lack of trust from investors and concerns for quite a few years. And in 2022, it was its worst loss year since the global financial crisis. But it came out last week to acknowledge material weaknesses in its bookkeeping. And with the collapses that we already have seen with the Silicon Valley Bank and the Signature Bank and the other banks that have already collapsed, there was a big problem with Credit Suisse. That was a 167-year-old bank that fell 25% over the week. And what you started to see was account holders withdrawing their deposits by $10 billion a day. So even a $54 billion emergency loan from the Swiss National Bank didn't stop the bleeding. They had to have someone to literally come in to acquire, and luckily UBS did that. So that stemmed the bleeding for now, but there is also a very interesting study that was done. There's actually 200 now, not 186, 200 US banks that are at risk of collapse as well, just like Silicon Valley Bank, where they've got a huge amount of unrealized losses on their balance sheet, right? From the bonds moving down so dramatically in 2022, and the banks putting a lot of investors or depositors money into these so-called safe government bonds. They're sitting on about $620 billion worth of unrealized losses collectively, the US banks. So there's around 200 other US banks that could be on the verge of collapsing as well. So we are in a very, very precarious situation right now. And we are watching this obviously very, very closely. So what have we got on? Well, we had our GDX trade from last week, and we closed out a spread that we had on for a 55% return in a week. So that's good. Let's just have a quick look at the actual chart. So if we have a look here at GDX, you can see that it's had a very nice move. Even the last few days, we've seen an even, and 3 days in a row, a couple of nice moves here. And it's actually come to fill the gap that I was looking for. It's actually filled that gap now. But what we did last week, and what I mentioned to everyone, was we initially bought the 22 strike call. What we've done is we've closed that call. We realized a profit of $321 a contract. And then what we did at the same time is we opened up a new call option, but this one was a higher strike at the 30 strike. So we rolled it up, kept the same expiry, 21st of April, but we rolled it from 22 to 30. Now what that did is it actually created a riskless, profitable trade. So we realized a $321 profit from the initial call we bought on GDX, gold miners. Then we rolled it up to the 30 strike. So that left us with $142 per contract that was riskless and profitable in the bank. We could not lose any money on this trade, right? We're going to make $142 no matter what. Pretty good deal. So we bought the new 30 strike call, and what I want to do now is close that out for $233 a contract, another $54 of profit, and I want to roll it to the 32 strike call. Okay, so we're going to realize another $54 of profit. We had 142 from the first 22 strike call, so overall we've got $201 in riskless profit locked in the bank. We cannot lose. In addition to that, we've got the 32 strike call where we've rolled it now. We've rolled it from 30 to 32. So we've got the call. If GDX continues to move up, we make even more money. But even if GDX pulls back now, we've still made $201 profit no matter what. That's the power and versatility of options once you really start to understand how they work. So that's locked in, profitable no matter what, but maybe we'll make even more money. We've left that door open for ourselves, right? Because most traders have a dilemma. I'm in a profitable trade and I don't want to close it out because I might make more money, and I don't want to stay in it because I could lose it all. So we don't have that dilemma as option traders. We have the ability to lock in profit and stay in the trade. Now, a couple of other ideas that I'm looking at right now. One of them is Nvidia. Now, Nvidia has had an incredible run, and we made some very good money on the way up with Nvidia. But what I'm looking at now, I'll just show it to you here, is this trend line. It's running into this trend line and this one. It's got an RSI, relative strength index, of 73 almost. Anything above 70 is overbought. So it's overbought. It moved down 1.5% on Friday, and the Nasdaq was up. So or technology, the largest sector in the market, which Nvidia belongs to, was actually up, and this was down. So that shows relative weakness. So relative weakness. It's had an incredible run, almost doubled in price in a relatively short period of time this year, from the beginning of this year. And right now it is overbought against two significant trend lines, and it is showing relative weakness, moving down 1.5% when the sector and industry and that it belongs to was up, right, showing that weakness. So there's some of the reasons why I'm looking to get into this trade. Now, what I'm doing is I'm going to buy the 285 call, sell the 280. So I'm looking for it to remain below 280. $182 a contract, that's all. Potential upside, 318. I set my profit taker at 82 and my stop at 82 and my profit taker at $4.82. So my risk is 100, my potential reward is 300, a 3-to-1 risk to reward. Not bad. The other trade that I'm looking at here is Team. So let's have a look at Team. Again, this is a bearish trade, looking for it to move down. So we have a look here and we can see that this stock obviously has been moving down. And if we have a look at this from this chart, we can see that the 200-day moving average has acted as resistance here, here, and here. So we've run into the 200 again. We've moved down. We're forming a bear flag now. We have a gap to fill here at 132.56. Okay, gap to fill, which is about $20 further down in price from where we are right now at 152. So I'm looking for this to move down. I also saw a significant amount of insider selling. Look at all this insider selling that has occurred just in the last month. So a lot of insider selling, and as well as the chart looking bearish, as well as a bearish charting pattern, a bear flag, as well as a gap to fill on the downside, right? So I'm going to set up another put spread on this one. Right now it's at 152.72. I'm looking for it to get below 140. So I'm going to buy the 145 put, sell the 140 for the 21st of the 4th expiry, $165 a contract. Potential upside, 335. Break even, 143.35. Set the stop at 65. Profit taker at 465. Potential reward, 300 if it hits a profit taker. Potential loss, 100 if it hits our stop. 3-to-1 asymmetrical risk in our favor. So there's another opportunity for us. A couple of opportunities looking for these tech stocks to move down. Keep an eye on the NASDAQ, which has a double top at the moment as well. And I hope you learned something there as far as managing a profitable trade with GDX, how we created a riskless, profitable trade, and some new opportunities as well. So from the Think Smart team, thank you all so much for being here. All the best, and bye for now.